Hey y'all, how's it going? I'm trading the ES futures on a 2000 tick chart with a 21 EMA. So today, I didn't really have the best performance, and I know you see this right here, but I'm gonna go over this. This is not, I didn't execute it very well. Um, Today was I had kind of an emotional trading day today. Sometimes that'll happen. I had two back-to-back losses here, which they're not really drawn accurately because you see how they would both be stopped at the same time because this right here was an add-on, so they got merged. It's basically just an 8 point loss because you see 4 points, stop, but it's an add-on double, so double the normal size, so that's just an 8 point loss basically. And so anyway, we'll get to that when we get to it. We're gonna go over this stuff first. So anyway, starting off, I put my overnight high up here because I started trading at 8, and so it fit here. We have this double top here, but we did push out before the market opened, and I did extend it because it fit pretty well here. We have this uptrend, break, first attempt higher, second attempt higher, failure right at this double top, forming the overnight high. And I like this, but it is a limit order trade because we have an extremely strong reaction, which is very good and part of why I liked it so much. But it does push down pretty far in this range, and I wanted to get out, because this break of this trend line was pretty thin, and I was thinking, it might attempt another leg up, after we reach these lows, and I didn't want to push it past it, so. That's a limit order trade there, but we do push on lower here, and we get this leg down, so we can see here downtrend, break, a couple attempts at a new low before pushing higher. So even when it's choppy, you can still see what's going on. You have this downtrend, break, first attempt lower, second attempt lower. So you can still see those legs there. And so after we have a couple attempts at a new low, we push on up. Unfortunately, I wasn't able to take anything in here, but at first these lows were higher, and I want to address this blue circle area. So after this downtrend played out, we attempted to reverse with two legs. So this is a two-legged move, and we had a very, very strong reaction off of this high. And so it does look good to attempt to get in. Now, when this happened, I was writing a post, but also you would need a limit order to get out before the lows there, because I wouldn't want to enter like this, I wouldn't want to enter like that, pushing it so far out of this resistance. This is definitely one to attempt with a limit order to try to get out of these lows, but I was distracted. I was writing the post on the site during that, but anyway, so it just goes to show it still works out the same even when it's choppy. Downtrend has a break, two attempts at a new low, and then has two attempts to reverse. And so anyway, from here we do push down. We get this two-legged move down before fading back up. I was drawing out some wider trend lines here, so I was not wanting to enter on that for a long. And then of course this higher low, absolutely not either, because we just bounced off of the high of this range, and so when you bounce off one side, you can expect two attempts. So it's one of those areas where you do have a sharp push up, but you're bouncing off a high, so it's just not clear. Also, again, it's right into that trend line here anyway, so nothing there. We push up, we break out, and we fade back in. Now, I didn't like how it was such a thin move. It was basically just one leg. You can see there's two legs on a very small picture, but I just see this as one sharp leg there. So I would have wanted to see, after we push lower here, a pullback, a lower high, or a failed second entry. But, so I did not like that. And, about this tick higher, some may say there is a lower high because it ticked higher there. But no, this is too small picture. I would want to see a clear swing separation from this push down. But we push on lower here, so we have two legs down at this point. Notice how we do push on through, but right at this level we do react, which we're reacting in other places, but it's not a coincidence that we react right at it. These measured moves are important levels. They're not always going to bounce right off of them, but they are important to draw because very often they will bounce right off of them. And so anyway, we push on lower here, and I kind of made a mistake here. So this second leg is a whole lot bigger than this first leg. Clearly it was a two-legged move, but it got so big it actually acted as its own trend. You can see here with this downtrend, we have a break. It's like a two-legged break because you have this measured move, but it has a third attempt to reach the measured move, and then we have these two attempts at a new low before reversing. And I didn't really, notice it correctly at the time. I still kind of just viewed it as two legs down, and the point is it got so big that it actually did act as its own trend, and I kind of just didn't really notice it. Just a chart reading error, and I was kind of distracted. I was listening to a podcast or whatever, and anyway, so this right here is a no fill. Now, I used a limit order on it because you see how, which let me get that. Yeah, it looked like it was off a bit there. So this is a limit order trade. I wouldn't mind pushing it into this trend line here because it's a failure entry. We have this uptrend, break, first attempt higher, second attempt higher, failure. But I wouldn't want to push it past this line and these lows down here together. So, I liked it with a limit order, but no fill on that. And so, not a big deal, but we push on lower here. We break out. We get a second leg down. We start fading back up. And then you see this right here. We have a very sharp spike up, and I liked it with a limit order. I wanted to get out at these highs. It looked like we were making this bottom here. But like I said, what I kind of missed was this downtrend was, even though it was that second leg, like I said, it was getting very big. And so it basically just acted as its own trend. And so it was making attempts at a new low for it. And so we had this first attempt at a new low. And I entered against that right after it, not really considering that it can easily just make a second attempt down. And that's what I always talk about. It 2 attempts at a new low, 2 attempts at a new high for an uptrend. But I just made some mistakes on this here, and so this is, like I said, or I don't know if I forget if I went into this at the beginning, but this is basically an 8-point loss because you see it's a 4-point target, 4-point stop. Basically on both of them. This one's 17 ticks, but they merged because, as you can see, I didn't get stopped out and then stopped out again. This was an add-on on the second entry. I don't mean second entry, but on this second time I entered here, it was just an add-on, so they got merged. It's basically an 8-point loss, because it was with double the size that I usually use. And so anyway, we push on lower here. Now we made this double bottom and had a very, very strong reaction. Now, at this point, I was, usually I'm better at controlling emotions, but I don't know, I like a flip switched kind of, So, I got very antsy, very jumpy, and I did not even analyze this very well. It overall does have good context, but I did not analyze it very well before entering. I kind of just entered really fast. Now, considering, this trend this range right here, it had those pretty consistent highs. It was right into it, and it did have reaction right off of it. Now, considering we had an extremely strong reaction, pushing all the way up to this bar right here, just nonstop, basically closing on its highs. We close on our highs here. We continue up and close on our highs again with this huge bar. So, and off the overnight low with this double bottom, this downtrend just played out with 2 legs to a new low, very strong reaction. So I don't mind pushing it through this necessarily, but I would use a limit order on it. If I was thinking, I'd use a limit order on it. But with that being said, I was so, kind of, how do I say, like messed up from this. I don't know why. I haven't felt this way in a very long time. Where like a flip switches and I just am not focusing at all, kind of, going crazy on the charts. So I didn't even realize how good of a trade it was. It was just a straight up emotional trade here. And I saw some things I knew was off the overnight low. I knew it had strong reaction, but the point is I wasn't really thinking during it. I don't know if y'all know about Rande Howell. He's the best trader psychologist in my opinion. I know Mark Douglas. I've listened to Mark Douglas's book, the audio, or about half of it. I didn't get through the whole thing, but and that's good. But mainly I like Rande Howell, and over time you kind of slip on the psychology stuff. I wasn't studying it enough lately, I don't think, and So that's I'm gonna get back into that. I'm gonna do a post on that. Maybe with some resources. Randy Howell stuff. Um, by the way, that's Randy with an E, so Rande Howell. Um, I would highly recommend him for your trader psychology, and it's very important to study trader psychology. People will study their charts all day, but they'll ignore the psychology because it's not fun to study. It's not as fun. It's fun to look at charts, but if you understand that, the psychology aspect is literally just as important, or else you will not make it. And believe me, I'm telling you, you will not make it if you don't study trading psychology. Basically, just as much as the charts. And I'm not, there are times when I would study psychology for hours at a time, and I knew, like, it felt at the beginning, it kind of feels like useless. Like, why am I studying psychology? I want to look at charts, but um, over time I learned how important it was. And after you kind of get your foot in the door with psychology, you kind of look into it a little bit more. You realize how important it is, and that's what happened with me. And so, yeah, there's only two trader psychologists I've ever, looked at. I know some other ones like, what's his name, Brett Steenbarger. He's cool. I've looked into some of it, but I honestly kind of forgot. But I remember liking him. But the point is, Randy Howell is the main guy that I like, and because he always talks about awakening the observer, and what that is like when you have an emotional response to something, it's easy to just like be in that moment and not really think, and you're kind of acting based on the emotion. But if you, what he calls the observer, you can observe, okay, I am feeling this emotion. It's a lot easier to calm it down, So like, and that you can do that. You can practice it outside of trading, and he would talk about how you should practice it in everyday life, and I would do that. So like, in very simple things like say you pick up your water bottle and take a drink, you can think, okay, I'm picking up my water bottle, taking a drink. So you observe everything. Like it's like having it's like watching yourself from the outside, kind of. And so, you know what I mean? So like if you say something happens while you're trading and it scares you, like it pulls against you or something, it can be very, very frightening. And it's easy to quickly exit or add on or whatever and just act emotionally, not really thinking. But if you, like he says, awaken the observer, you can say, okay, I am having this emotion right now. I know that I should not act based on it. Just breathe and, try to focus and try not to act based on the emotion. And if you can see that you're having that emotion, it's so much easier to not give in to what it's wanting you to do, So, that's all about, like I said, awakening the observer. So you should really look into that with Randy Howell, because it's like fight or flight response. And that's what he talks about that all the time. So like when you say like if you were to like if anything bad happens while you're trading, like once again pulls against you, you miss a trade, you enter something bad and you just had a loss and another loss, it's very easy to get that fight or flight feeling, like you're like the market's attacking you, you feel like you're being victimized by the market. And so that can lead to over trading and all that kind of stuff. And it's basically like similar to if say you get scared by, like out in the wild, if you get scared by an animal, when you see the animal like a lion or something, you're going to get a fight or flight response. And when something like something bad happens while you're trading, like it pulls against you, your brain doesn't recognize the difference between the animal attacking you and the the chart, the whatever's bad happening in the trading. And so obviously you as a rational person, okay, obviously you're not going to be at the same fear level as if you see a lion, because the market's not going to eat you like a lion, you know what I mean? But your brain has the same type of reactions to it. It's automatic and it's subconscious and it's about your survival, And I didn't even realize I was going to go this deep on psychology today, but I might as well keep going. So, it's about your survival, and if when your brain thinks it's reacting to something that's a real threat, like a biological threat to your life, it's gonna, you know, react based off of emotions, because in a situation that is life threatening, like say a lion, it's going to be good to have that fight or flight response, because you're going to get the hell out of there. But when you get those same kind of reactions to trading, and you feel like the trading is attacking you, the market's attacking you, the market's victimizing you. If you have those same kind of reactions, you're going to make all sorts of terrible decisions, because once again, since you're not going to literally run away from your computer, although sometimes that might be a good idea. You're not going to literally run away in the same way that you'd run away from a lion. It's you're just going to make terrible decisions, and so, really, you shouldn't just listen to me. You should just go listen to Randy Howell. He would explain it way better, and he gets into way more stuff, like, it's about, like, like he always says, beliefs are based on the management of the unknown. And so, because the unknown, like say you're in a trade or something, you don't know if it's going to work or not, and going against you, and then it's going for you, and back and forth, and it's unknown, and the people have a fear of the unknown. That's why, like, criminals will confess to things that they did. Like they can't stand the fact that they don't know what's going to happen to them. Am I going to go home free? Am I going to go to jail? They can't stand it, and so that there's so much pressure, they'll crack and spill everything. And so the point is, it's about observing your emotions and noticing what's happening, which today this really went out the window. And I am green, but I don't feel like I did good performance today. So I'm not going to put the points in the thumbnail today, because it's not really about each day making money. It's about consistency. And the way that I traded today, if I traded like this every day, with my emotions and everything, I would absolutely not be a profitable trader. So today, the psychology kind of just went out the window. I don't know what happened. It was just, an emotional trading day. Every now and then it'll happen, but today it was just like, I don't know, I was fuming for some reason. But, so, and there's other things he goes into, like, and not everything that he goes into is going to affect each person. Like, some people, they feel like they don't deserve to, they feel like they don't deserve to make money. They don't deserve to be a trader and all that kind of stuff. And so, I've heard something called, what's it called? Imposter syndrome. So, like, as you start doing better at something, it feels awkward that you're, doing that well. And so it can feel like, oh, I shouldn't be, I don't deserve this. I should be lower. I shouldn't be doing so good. And it's kind of a subconscious thing. Like, it's just strange that you're, elevating in life or in trading or whatever. And so, and that's called a self-limiting belief. And that's what Randy Howell goes into, self-limiting beliefs. If you really believe you don't deserve to trade, and even if it's subconscious, which is why you have to awaken the observer to really try to notice things. Because if you have self-limiting beliefs, like saying you don't deserve it, or you're not good enough to be a trader, then you're literally not going to ever be a trader, because those self-limiting beliefs are going to manifest while you're trading. And so, and he always talks about going from a survival-based mind to a probability-based mind. So, and you got to train it, which, I shouldn't be going too deep. You should really just go check out Randy Howell. And if this is like the first time you're watching and you think this is an ad, this is not a sponsored ad in any kind of way. This is actually just the guy that the only guy that I use for trading psychology, with the exception of Mark Douglas's book. Yeah, which, I really owe a thanks to Randy Howell, because he really has helped me in other ways than just trading, because if you learn to control your emotional responses while trading, it really helps in other things too, including dealing with people. So you know, um, I do got to get going here. Sorry I didn't go through the entire chart, which I stopped trading after this trade anyway. So I didn't even trade any of this, and I don't really have time to go through it. My nephew was just born, so I'm gonna go visit my sister, and I'm just gonna relax for the rest of the day. It's like I still feel jumpy. I'm still like kind of shaking a little bit from today. I don't know why. Sometimes it's just really, um, you know, some days are just different. I'm saying a lot. Wow, I just said it again. Um, yeah. So thanks for watching. I'm gonna end it here. We're at like 20 minutes or something, so I gotta get going. But really look into Randy Howell. Once again, sorry I couldn't go through the whole chart. I kind of got sidetracked talking about psychology, but I think it's important given what happened today. And yeah. So anyway, thanks for watching. I hope this video was helpful in some kind of way, and I'll leave a link to Randy Howell's YouTube and his website, because and by the way, with his website, I I've never taken his like course or anything. I just watch all of his videos, but I've taken notes on this. Like I have old journals. Some of them are for technical analysis, some of them are just for psychology. And when I mean some, it's because I've filled up multiple of TA and psychology. And when I would write the notes, I would write them like really neat, really perfectly, like I would date everything, and I would also write out a title for every page of notes. And so I've probably written Randy Howell's name in my notebook over 100 times, 150 times. So the point is, the psychology is very important, and anyway. So anyway, thanks for watching. Check out Randy Howell, and I'll see you next time, guys.